cloud for later use. So welcome. Thank you for joining us again. This is the last session of PowerSkills 2021. The courage strikes back. We're so happy you made it through the whole day. And today we are extremely lucky to end this strong with the financial planning webinar with Guillaume and Eduardo that I'll present a little later in my presentation. So I just wanted to say that this session was organized by the Career Advising and Transition Service of McGill School of Continuing Studies in partnership also with University Advancement. My name is Naru Garyepi and I'm part of the CATS team. So let me just welcome our guest speakers today, Eduardo Lima. So here he's a faculty lecturer program coordinator in finance. I'll let him introduce himself even more, and I'll be also taking care of the chat. So feel free to write as many questions as you can. Thank you.
Thank you, Nayo. Hello, everybody. So as Nayo was saying, I'm working at McGill University in the School of Continuing Studies. I'm responsible for the finance programs at the school. And we have been working with many students that are looking to make career changes or recently arrived in Canada and level up their education. Having a McGill certificate or diploma is always well valued in the job market. I'm here to speak about financial planning, one of the possible professional areas in the vast field of finance. I'm here to speak with Guillaume Landry Allard. And I'd like to introduce Guillaume to you. He holds the financial planner designation and has been a division director at IG Wealth Management since 2017. With over 12 years of experience in the financial field, Guillaume has developed an approach that focuses on quality advice and close relationships with clients. He has a Bachelor of Business Administration, and his experience and knowledge are highly valued by his colleagues and clients. Guillaume also excels at explaining and demonstrating in simple terms the benefits that complex financial concepts can provide, as is required for someone who works as a financial planner. There's a huge amount of education involved in the day-to-day work. His refined analytical skills let him grasp and make sense of complex situations. All of this allows Guillaume to be competitive and efficient in a perpetually changing industry. So Guillaume is here to really give you the insider information, all the details that you might be interested with respect to the career of financial planning. I will be kind of moderating or interviewing his contributions by sometimes asking a few prepared questions. And we will be also interested in hearing your own questions from the audience for Guillaume and for myself as well. I will be, trying to contribute from a more general finance perspective. And I'll be glad to speak more about whatever questions you may have for me as well. So Guillaume, I will let you say a few words to start, maybe about yourself, something that I have missed, and then I can start asking, one or two questions. What do you think?
Thanks a lot, Eduardo. Thanks a lot for having me tonight. It's a real pleasure for me to demonstrate a little bit to future students, I can say, what is financial planning and the difference that it can make in people's lives. I've been in that industry, I would say, for the last 15 years. So in finances, as you mentioned, I studied in business administration before, and it is a field that is very, very interesting. It's something that it's constantly changing. So I think for a seminar, for a conference like this, it's something really nice to try to grab the feeling of working in that business, in that field. So it's going to be a pleasure to have that conversation with you. Again, as we mentioned earlier, and I think Nairo mentioned it in the chat too, feel free to ask questions. Meanwhile, we can check and see if there's anything that could be added to the conversation while we're doing it, or we might take question at the end, depending how it flows. So feel free to interfere and get in that conversation. It's going to be even more interesting.
Great. So welcome again to all of the folks who decided to be present here, and feel free to send questions as well. I think you have access to a chat box. Let me start asking you, Guillaume, can you tell us a little bit about your career and how your education led to where you are today? So the interplay between your education and the career.
Definitely. To be really honest, and I'm happy you talked about that in the beginning. You mentioned that there might be some people that are refocusing their career to look into a finance program. So that's exactly what I did. I studied in computer science before. That's the first thing I did. And when I graduated, I said, no, that's not what I want to do in my life. So I loved taking those courses. I think it was a really important knowledge to gain. However, that made me realize also that it's not the field that I wanted to do. So at this point, I was maybe 23, 24 years old. I decided to go into finances at university. So that was a turning point, I can say, in my life to start a new degree in finances. So I did, as you mentioned, the business administration bachelor, which opens to, I would say, a lot of possibilities. So financial planning as per se, and Eduardo, you could probably be even more specific than me on that, but financial planning as per se is not really taught or trained in school. So normally, and I know McGill is having a program right now, so that's very, very interesting for us. But basically, when we learn finances, we learn mostly corporate finances, and we don't get much into personal stuff. So what applies to individuals like you and I on a daily basis. So I did that course, and I said, what I like is people. I like social. I like being involved with people. I like making change in people's lives. So at this point, I said, I like finances. I like numbers, but I don't want to be an analyst working somewhere in an office, crunching numbers on a daily basis. That is not what I want to do. And so I was working at a bank at the moment, and I started looking to what are the opportunities where I could take all the knowledge, all the things that I've learned into finances and apply them to actually make a change in people's lives, if you can put it that way. So financial planning came as, I would say, a revelation to me, because in the beginning, I didn't quite know that thing exists. I mean, you're 23, 24 years old, not much investment, not much complicated stuff in terms of finances. So when I first realized that, I started reading, I started learning, and I realized that the whole field of financial planning in Quebec is regulated by the IQPF, which is the Institut Québécois de Planification Financière. And to be able to access the IQPF courses and eventually get a designation, you need, in most cases, a bachelor degree. So that was a very good point, very good path for me to get that finances degree. Then I moved to financial planning. And after that, but there's a lot of courses you can do to make your knowledge even more specific, or to be better in certain fields. So I got some designation down the road. I got my, I'm always confused with the name of these in English, but group saving representative, as well as the one coming from the insurance companies. So these two really allowed me to be able to serve clients even on a broader basis. So we'll cover that later on. But that's basically what I came from. So the message that was coming from that, I would say, is everything you do. So from my point of view, I did computer science and then I went into finances. What I've learned or what I've gained into my 3 years of computer science, I'm using that on a daily basis, in a sense that all the skills that I've learned are complementary and can be used all together no matter where I go. So from my point of view, no matter what you do in life or in terms of trainer or school, it's never lost. It's always going to be used in something else. And I think I'm a good example, if I can say, of that.
Yeah, for sure. Very interesting that finance today is being so much impacted by technology, right? So we hear about the fintech and the impact of even in the job market, we are very pragmatic. We are looking at the reality, and I work in education. You work for a firm that offers products to individuals and services. It's a product that's actually a service. It's a service that includes so much. And I'd like you to talk a little bit about what is involved. It's very hands-on because you're looking at people's portfolios of activities. So maybe you can talk a little bit about that. What is the interaction that you have with your clients? What is the profile of your clients? Is there a typical client that you have, or is there some variation of that? And this way, maybe we can learn a little bit about the work, what's involved, what you learn in school versus what actually you also applied, because it must be very much related.
Definitely. I would just confirm or clarify something when I was saying the insurance title. Sorry, I forget the name, because I'm always familiar with those acronyms in French, but in English we call it a financial security advisor. So it's one of the courses that I had to take. So I'm sorry for at the moment. So to your questions, financial planning is very holistic approach. And when I was starting into that field, from my point of view, financial planning was basically investments. Because when we talk about finances for individuals, what brings to mind to a lot of people is actually taking care of investments. But investments and portfolios and taking investment decision is basically one of the aspects that we're looking at. And the name, or the designation financial planner, where it means that we're really planning the lives of our clients for every aspect or every element that can show up in their life. So I'll give you an example. I'm 45 years old, for instance, having a duplex in downtown Montreal. I live with my wife. We have 2 kids that are almost grown-ups going to McGill. And I'm starting to ask myself a lot of questions. So when should I retire? What should I do with my duplex? What are going to be the impact of the taxes, the fiscal impact when I decide to sell that duplex? If I want to give it to my kids, what would be the fiscal impact? What would be the best way to take that duplex and transfer it to them without losing some of our value? And what happened if I die before that transfer happened? What happened if I die before my retirement? So there's a lot of questions that we can ask ourselves. And the more complex our strategy, or the more complex our situation is, the more planning it requires. So if I'm working regular business, I have a pension plan with my employer, I live in an apartment, there's still some good planning opportunities, some good optimization that can be made. However, it might be a little easier if I consider my first example. So the more complex is my situation, the more planning we can do. And what I realized over years is that people don't know, in most cases, that there is planning to do unless you start that meeting. In a sense that I've never heard anyone asking themselves, if they don't know or if they never started the process, oh, what's going to happen with my duplex when I pass away? I mean, no one asks themselves those questions. And it's our job as a financial planner to make them realize that the government might take half of your profit in taxes. Oh, okay, but there is some way to avoid this. What are those ways? So that's where a financial planner is going to be useful. So who are our clients? I would say anyone. Anyone that wants to, how can I say? Anyone that wants to be part of their finance, to take their finance in charge, and being helped, if I can say, by someone that has knowledge of that field a little more than they do, can be a good potential for financial planning. So I think it's for everyone. I think it's for every moment of our lives, because we don't start planning at 65 years old. We should start planning at 22. So the more the biggest element or our biggest ally when it comes to financial planning is usually time. So a lot of people, again, seems to think, oh, I'll start thinking about financial planning when I get to retirement. It's good, but it might be too late. So there's no matter how old we are, no matter how much assets we have, no matter how complicated our situation is, it's basically being able to plan in advance and to to make sure that all the aspects of the finances are taken care of.
For sure. And just to give another data point, in my case, I do have someone who helps me. They play the role of financial planner for me in my household, and I have the pleasure that person is also a friend of mine from earlier periods in my career. But he's working as he works as a financial planner. He works independently, and he's followed similar path. Obviously, he was not. Every person comes from different backgrounds and different directions. He had his own as well, and so that's another example there. And I'm happy that I'm actually have someone looking at my overall portfolio, my financial portfolio of who I am actually, right? Because we all have finite resources, finite time, and so we want to make the best out of it. And why not, have the structure that has been developed by our science and brilliant minds to be able to use this for a reasonable price, because the service that is being offered here is a service that has quite a bit of value, right? So
In fact,
it's very interesting.
there has been some research being made in the last years that says that a family household that is helped or is a companion, it's helped by a financial planner, would gather 3.2 more wealth over 15 to 20 years than a household that is not taken care of, if I can say, by a financial planner. So it actually makes quite a big difference in people's life, and it's really because there's so much things we don't know. I mean, we study for 3, 4, 5 years, depending how far we want to go in our knowledge to get to that point. So there is a lot of stuff to take care of. There is a lot of stuff to know. And I'm happy. It makes me smile that you say that it's a friend of yours that do that, because what I always say to clients, I don't want to be the guy taking care of your RSPs. I want to be the guy that you call on a barbecue with friends because you have and you don't know the answer, you don't know how to tackle that specific question. So I'm trying to be friends with my client. And one of the things that the parallel that we do, we all have a doctor, we all have a pharmacist, we all have a plumber, an electrician. We all need a financial planner as well. It's part of our family, it's part of what we can do. And it actually makes a difference. One of my job, if I consider the analysis that I'm doing, is I'm showing the client the value that we're trying to build. So this is the plan without doing anything. And if we put in place all the strategies and all the stuff that we want to do, here's the impact on your investment, on your taxes, on your estate, so all the aspect, and we can actually bring value and calculate that value that we're bringing to a client. So that's the interesting part.
Yeah, great. There's so much to talk about. I want to also ask you, maybe I'll leave that for later. I want to ask you about your firm and the work you do that specifically, but in terms of career, maybe people are thinking here about career. But before that, just maybe to conclude this overall overview section, the role of technology and the robot advisors and the impact that these trends, even in the face of the pandemic, we can't ignore what's going on in the world right now. There is so many trends and important trends and big changes in economy and everything. It seems that financial planning is there to even grow, because even having so much machine supporting this work, you still need to have this education component and this one-to-one, this trust relationship that your client will want to have with you. So how do you view the job market evolution with, in this real world that we live in?
That is a very, very interesting subject. And as of, I would say, every businesses are changing right now. The pandemic, the COVID-19 brought actually at maybe a faster pace to all those changes over the last year. I'll take our business, for instance, we're still fully operational. So as of now, I haven't missed one day of work from the time we we were in the office and the time we're working from home, I'm fully operational from home. So that's one of the good things about financial planning, is that we're relying on people, which we can meet through Zoom, Teams, and all those different platforms. We're relying on softwares that can be used everywhere. So for this part here, how do we adjust in a constant changing environment? And the pandemic is very, very important when it comes to that. It is, I would say, fairly easy. However, how the business, our roles going to evolve over the next 5, 10, 20 years, I think there's going to be a lot of impact. And as you mentioned, the pace of technology growth over the last 25 years has been dramatic on a good point of view. I mean, it's exponential. So if you remember 25 years ago, we were still using floppy disk, which were this big. And as of today, I can store the equivalent of 1 trillion floppy disk into my phone. So this change going to be even more accelerated over the next 5 years. And you mentioned robo, you mentioned algorithms. So investment, if we're only isolating investments are driven, or shouldn't be, but are driven by emotions. A lot of decisions that investors are taking are usually driven by their emotions. And emotion is usually one of the biggest element to avoid when it comes to investment, because investments are very pragmatic, very technical. So we're starting to realize, and that has been a trend for the last 3, 4, 5 years, that computers, algorithm, robot can make investment probably better than we do, because basically they're doing analysis, and a machine can analyze a lot more data than I do. So what I think is going to be the evolution over the next 5, 10, 15 years is that eventually we're not going to be money managers. We're not going to be investing money for our clients. We're going to choose algorithm that's going to make the job for us. What we're going to do as planners, we're going to do planning. So that seems obvious, but we're going to work on strategies. We're going to work on taking decisions, on evaluating impact of different ideas. And that is something that, from my point of view, a computer cannot do that well. I was talking with a client earlier today, and I'll use that example. And we were really having a conversation of exactly the example I mentioned earlier. When should I sell my duplex? There is an economic moment that actually worked to sell that duplex for multiple reasons. But there's also a human consideration in there. There is an individual on the other side of my screen, because we're in Zoom right now, saying, yeah, but I do have, and that will sound funny, but I do have feelings, I do have objectives, I do have targets, I do have wife, I do have kids that are important in those decisions. I do have elements in my life. I want to travel, I want to play golf, that will have an impact on those decisions. And what I like to say to clients is that there is the financial decision, the mathematical one, the one that it can be calculated and it's sure it's this. And there is the emotional decision, the one that you can't really put numbers on it, but it is usually the most important one. I can tell you, you have to work until 65 years old to be able to take retirement. But at the end of the day, if you hate your job, you might want to stop earlier. And it's my job as a financial planner to say, okay, you know what? You won't make it to 65. Here's how we're going to adjust. Here are the impact on your plans. Could you do one more year? And this is not something that a computer can do, because it involves human feelings or human compassion between two individuals. So I think eventually computers will cover a lot of the technical, the mathematical part of our job, but everything that is involved with speaking with clients, with having those 1 hour, 2 hour conversation about what are your goals? What do you want to do in life? How can I help you achieve those goals by putting all the financial structure that you need around this? That is something that the machine cannot do. And that's where I think that, just as a doctor, just as a pharmacist, I don't see the day where I'll go to see my computer and say, you know what, computer, I'm not feeling for 2 weeks and I have trouble with my knees or my elbow or it won't work. The doctor will be there at least for the next 100 years. So it's about the same thing I see with financial planning.
For sure. Great. Thank you so much. So I guess maybe before we go to the questions that people have started asking, maybe I would just ask you to talk a little bit about IG and wealth and your role, and so maybe this can be kind of some description of a possible job station for possible candidates that might be thinking about having future jobs, or they're working somewhere else. They might be thinking about joining this profession. So I'll leave it up to you to choose your words.
Excellent. So for those who know IG, or for those who doesn't, so IG Wealth Management, we're basically a financial planning firm. So we're similar to a bank in the sense that we do have our own lineup of products. We can do mortgages, we can do investment, we can do loans and all that stuff. But we're really introducing ourselves as being a financial planning firm. Reason behind that is I strongly believe that a product is not making a difference in someone's life. So if I'm meeting you today, Eduardo, and we're saying, what would make you sleep better at night? Would you prefer Bank of Nova Scotia investment, or RBC investment, or Investors Group, IG Wealth Management investment? Or it doesn't really make a difference for you. So I don't like the idea of being a firm that offers financial products. Everyone can do that. I'd rather be, as we said, a financial planning firm. And I think that is something that separates us a bit from the banking industry. Banks and all the other companies involved, they do have financial planner too. But it's a different mentality, because you need to have a specific number of assets to meet those planner, and so on and so forth. We do have the beliefs that an individual do need planning from the beginning of their financial life to the end, if I can say. So that's where we're targeting. That's where we actually try to differentiate ourselves, is by really putting the focus on that planning. And when someone asks me, yeah, but what are the products you're offering? I'm offering whatever you want. That is not the challenge. And that is not how we create value. So I was talking earlier today about how we show value and how we create value. And there's one thing that Benjamin Franklin in the past said, there's two certain things in life: death and taxes. We're sure we're not going to avoid those two things. And it's actually still true today. So taxes is something that no matter what you do, there will be some taxes involved. You can't fly away from CRA. So I think that we can create way more value by being able to control and adapt and optimize taxes than by selecting a product that makes 1% more, 1% less. So I'm happy that IG made that decision. And in fact, I was working in banks in the past. I made my move through IG about four years ago. And this is exactly the triggered my decision, is that I want to show to my client that I'm doing real planning. So it is what we're doing right now. We have offices basically all across Montreal, North Shore and South Shores. We're all across Canada, in fact. And we do believe that there's always room for new financial planner, as well as we do believe there is always room for new entrepreneurs, for new families, new people. Everything will grow, and we need some planners to be able to help those people. So it's really the idea that we have. So we're always looking for new blood, if I can say, for new financial planners. We're offering a lot of coaching, teaching, courses to make sure that when our people are going out there on the street, not on the street as per se, but meeting clients, we want to make sure that those conversations are at the maximum, the best possible. For people that are interested in that field of business, but are still in university, or still doing courses, or still trying to see what they want to do in life, we do offer some internship. That depends on offices, that depends on the time of the year, the needs that we have, and so on. But it is something we're agreed, or we're not licensed, but confirmed as being a place for internship by the different university. So it is something very interesting, and then someone can learn really the ins and outs on what we're doing on a daily basis. So I would say IG Wealth Management is a very nice firm to work at right now. But I would say even more, financial planning is a really nice field to work in right now. It's something that we do feel we make a difference. It's something that I wake up every morning and I'm happy to do the work that I'm doing. I love personally dealing with clients, dealing with colleagues, trying to really like speaking with people and say, okay, is this a good strategy? Or no, why don't we try this? And we're going to update like that. That's really make a difference in people's life. And that's something that I like. I wouldn't be a doctor. I'm afraid of blood. I'm afraid of all that stuff. So my way of making a change in people's life is really by helping them through finances. So that's my.
That sounds great. I love your enthusiasm. It's really contagious. So is it fair to say? Is it fair to say that the financial planning is in demand for jobs? Like the jobs are, you have opportunities. Looking in the future, you see that this is a career that is going to present with opportunities, whether in IG or in other areas where financial planners can. Is this an attraction type of point because of the need for this? And we've just talked about the outlook in the near future with the role of technology and everything else. This is not going to go away. So this is a good career.
Yeah, and it is, and it's going to be even more, I think, because we've been talking through that for the last, I would say, 3-4 years. But the next 10 to 15 years are the years where all the wealth that was acquired by the baby boomers, so generation, I would say, before me, is being transferred to that next generation. So all those entrepreneurs, all those big, not employees, but I would say president or bosses in different companies, all the baby boomers that built wealth over the last 30, 40 years will be transferring that eventually. Transferring wealth in a way in cash, but even as a company, as buildings, transferring that to kids or trying to optimize that, it is really challenging. So it is probably one of the best time to be in that field because it's probably where we're going to have that biggest impact. And there is room for everyone. Sometimes people seems to think, oh, it's not saturated, but there's so much advisor, so much planner right now that there might be fighting for clients, if I can say. Definitely not. I hear or I'm getting contacts, I would say almost on a daily basis by new people looking for someone to help them, someone to make analysis for them, someone to take them through their financial life and get to retirement with them. So there's always possibilities. It's going to be a changing world for the next 5-10 years, that's for sure. But however, that changing world is probably what brings, I wouldn't say joy, but what makes our life fun and allows us, I would say, to really go forward and try to really make a difference. That's the thing.
Great, thank you so much. Well, maybe now it's time to look at some questions that have been asked by the audience.
Okay, fantastic. Do you want me to read them to you? First of all, I'll ask Doa and Ash if you want to speak up yourself and read the question. If not, I'm happy to read them for you. So you can write in the chat if you prefer for me to do it. I'll start with Doa. So Doa, what is the fees range of FP and is it tax deductible?
That's a very good question. And it's something being asked by other clients. There is I would say two different ways that we can do plannings. The one that is less known or less used, if I can say, would be, I don't have a better word for that, but would be a financial planner paid by the hour. So it's not someone managing assets. It's not someone that take care of our portfolio. It's someone that do sporadic or spot checks in our financial life. So just like our accountant. So we go see that person, they're doing a good plan, they're building up strategies and they're showing those strategies to their client. That person gets paid, thank you, and they go to another mandate. Client goes with their planning and try to apply it as much as they can. And that is perfect for some individuals that do want to manage their investment by themselves, that might not need insurances, that are not really too much of a complex situation. It might be perfect, but it's not something popular. There's not a lot of those planners. When we comes to the I would say the most normal one, usually there is definitely a fee to deal with some individuals. It's hard to say how much, because there is a fee applied by the products, there is a fee applied by the firm or the planner. But basically a client could think about paying somewhere between 1% and 3%. 3% being very, very, very high. 1% can be meaning being in the lowest, but it's an idea. So let's say I have $250,000. Yes, it might cost me $4,000, for instance, to deal with a financial planner. However, it's going to bring a lot more value. And that's what we have to think about. It's something that we cannot do everything in life. And when I like to say to clients that say, yeah, but I can do my investment by myself. True, you can do everything by yourself. You're going to still pay some fees, because all the products do charge fees. However, you can do it. But you don't know, how can I say that in a smart way? You don't know something that you don't know. So for instance, exactly. If you don't know that the TFSA, the tax-free saving account, exists, it's a very easy example, but just to give you an idea, you won't Google it. You won't make research about a TFSA. You don't know that it exists. And that's our job as a financial planner, to tell you, I think you're forgetting this. I think you might be using that, or there might be an opportunity here. And that worked a lot more. But if I have a planner or an investment advisor, or no matter what that person is, because there is some different level, or wouldn't say level, but different designation. And that person calls me once a year and say, hey, Guillaume, it's time to contribute to your RSP, put 5,000. And I never heard of that person again for the next 5 years. Yes, it might be a little bit more, or a little bit too expensive. But I'm pretty sure if a good planning is made, you're going to get a lot more for your money than what it costs. But there is a cost. And we can't do everyone. I was saying earlier, I cannot fix my car myself. I cannot renovate my home myself. I cannot fix the toilet myself. I cannot make my will myself. I need a notary. I cannot designate or decide what are my health problems myself. I need a doctor. So in a lot of cases, we seem to think that investment, it's easy because everyone can do it online. But there's so much subtlety, so much element that people are not thinking of when they're doing it on their own, that what makes a difference. There is a cost, but it worth that cost a lot.
Thank you, Guillaume, for such a detailed answer and for using such great comparison. It makes it clear for everyone, someone who doesn't know much in finance. So thank you so much. I'll jump with Ash question here. So do financial advisor planners plan taxes like accountants do? It's a loaded question. So like accountants do, what is the different similarity between having a financial planner versus accountant for personal finance?
So there is a thin line in some cases. So that really depends on the type of accountant we have, because there is a lot of accountants, and I'm not blaming them. That is their job, that are doing taxes, but they're not optimizing taxes. And reason being, that's what they're coached, that's what they're trained to do. So if we have a fiscal expert, just a fiscalist, as per se, that person could be doing, yes, optimization, making sure, are we taking all the credits? Are we taking the RSPs at the proper moment, the good amount, and so on? But this person might cost somewhere between $250 and $500 an hour. So it is probably the best professional we can have, but it might be costly depending on my situation. So we, as financial planner, are working with tax expert. So I do have a tax expert that I'm speaking with on a, I would say, weekly basis, that can get involved in my client planning if needed. So the difference is, I would say, the accountant, as per se, is more involved when it comes to tax season, or if I have a company, bookkeeping and all that stuff. But they're not really working on optimization. It's not an arrow pointing at them. It's not really their job. Tax expert will do that, but at a high cost. So the best thing you can have is a financial planner that works with a tax expert and an accountant. And when I'm meeting with clients, if they have their own accountant, it's something that we would do. So I'll call the accountant, okay, I'm planning to do this. What would be the impact on your side? And we're working together to trying to make that planning a lot better. So I think that would be the biggest difference. When it comes to similarities, however, accountant and fiscal expert are not doing investment, they're not doing insurances, they're not doing, so it really comes to taking a picture of the actual moment, but they're not planning, and it's not something against them, but with 25 years down the road. So they're not building plans 25 years down the road. They can tell my client, when you sell your duplex, this is the impact that you'll have, but they'll not necessarily make a plan for that. So all these are all working together to make sure that we're offering the best to the client.
Yeah, this seems like related to the differences between accounting and finance, so that you have a broader finance overview of everything, and accounting is just a tool for that purpose.
Exactly, and Ash, you're really asking the right questions, so I'm having even more questions from him here. During time of crisis and looking at the current market, are human prediction, which are more emotional, better than robots' algorithm? Are financial planning firm using more computer predictions algorithm or less as a result of the current market?
That's going to be a tough one to answer, and there's some parts in there that, to be honest, I won't be able to provide you with the best answer, but I'll do my best. From my point of view, a machine is very good when it comes to replicating something. So if I'm telling you that every time a company or a stock's hit a certain point, it's going to be the impact, or the next movement is going to be like this, and a machine can replicate that. Artificial intelligence can make prediction on models, on how we're going to go, and so on. But when we do have a crisis, like for instance we had in 2008, or what we had in last March with the COVID, it is very different, because there's still a portion of market that is affected by offer and demand. And therefore, when human beings start to bring their emotion on the table and start to sell or buy investments, it can have an impact on the whole market. If tomorrow everyone starts selling their investment, the market's going to go down. But that's something based on emotion. Everyone decides to sell their investments because of COVID. A machine cannot predict that. A machine could, maybe artificial intelligence, say, there is some news coming in, COVID, that news is not good. Normally a human being, when it heard some bad news, reacts like this. But at the end of the day, it won't be as much or as accurate as if a human being that has those same emotions take that decision. So as of now, I think there has been a lot of calls of transaction by the managers, and I'm not a portfolio manager as per se. I do buy products or investment that are managed by teams of portfolio managers. So I think those managers right now are using really both. The long-term strategy is probably, and I'm not there, so I'm really, the way I'm seeing it, the long-term strategy is probably more built on algorithm, while the short-term movement, what's going on a daily basis, is more managed by a human being, based on emotions, based on how the markets are going, based on their experience, based on what they read and how they think people will react to that. So I think it's really an hybrid between the two at the moment. But we're going to go more into as artificial intelligence is getting better and better and better, I think we're going more on the computer side.
Yeah, and also it's true that when you were thinking about the human contribution, human predictions, they're not being done without the technology, right? They're being done with the support of the technology. So you can't really compare with and without the human touch, because of all the reasons that you mentioned, Guillaume. Obviously, it will be more important. Now, what you have to be careful with, which is part of what you study when you are educating yourself in finance, is I guess the dangers of following an emotional impulse when making financial decisions. And then that's one of the values of a financial planner or any professional in the vast field of finance is that they will help you avoid making those mistakes. Sometimes you have these biases, right? They're coming from cognitive or emotional biases. And this is all part of what humans have. And you use technology to try to remove those biases, and also you use some support, human support, to also work you through those things. So just
it's a combination between the two.
Thank you for the question.
Yeah, I love what you tag team together there and really answer this. So yeah, for sure. I also trust that you cannot replace a human anytime soon for at least all of the components. And now Paul, Paul here has another great question here. So a lot of people have short-term insurance to 60 or 65 years. What advice do you have for those people to cover them after 60 or 65 years when those insurance plans expire?
So there is a lot of different views on that. I'll give you multiple possibilities, if I can say. I'm not saying one.
Oh,
no worries.
Maybe I can start. I can start answering while Guillaume returns. Hopefully, he will be returning.
Yeah, for sure. Go ahead.
So just for reference, I did work in the retirement field as an actuarial consultant. So I didn't work as a financial planner, but I had to consider the situations, the financial situation of individuals because they were participants in the pension plan from a different angle. But I can address this question because after 60 or 65 years, once the person takes their retirement, they will receive some benefits, right? So that's why it's important to have savings while you are still in an active career. You are working, you are receiving income that should be enough for at least part of it to be deposited in some kind of pension plan, so that after retirement, you will be receiving that income. Now, if you talk about life insurance, which may be what this question is about, so Paul may be able to specify if he's talking about insurance in general, but if this is life insurance, depending on the wealth of the individual, there will be many different life insurance products that have a certain behavior after age 65. What is actually being used right now by the financial planners, I would be hoping that Guillaume could answer, because he's working in the financial planning for a financial planning firm, and I think he's coming back. So just right in time. So I gave kind of a very generic answer, and hopefully we'll be able to complete this from the financial planner point of view.
Just like a genie, he came back.
I'm really sorry. Had a little technical issue that cut me right away. So I'm sorry about that. So as I was saying, it is a very good question, and there's some multiple point of view on this. So the first way, or the first approach that I would bring is an insurance really required for someone over 60 to 65 years old? And I'm talking about life insurance. I just want to review the question that you sent, because I think it was really referring to life. It is, and it's part of the planning process. If I start the plan in advance, so let's say at 35, 40, 45 years old, I'm trying to plan in a way that I probably won't need that insurance when I reach 65. First of all, because most of the plans I mentioned are expiring. And second thing, because at that point, the price of insurance is getting really high. So I'm trying to plan to make sure that whenever it comes to that point, I won't need it. And what does that mean, needing it? An insurance, from my point of view, and again, there's a lot of different views on that, but an insurance is there to cover a need. I'm not taking insurance on my cars just for fun. I'm taking insurance on my cars in case I have an accident. So I'm taking insurance on my life in case I die, and there is a financial impact on the people around me. If my financial planning has been well made, I think, and that's really, again, my view, that the financial impact of my death when I reach 65 years old or when I get to retirement will be a lot lower. My kids are normally grown-ups, so they have their own life. They can manage their own finances. They're good in life. I might have, or my mortgage might be over, so there's no real debt that needs to be covered. I have investments. I normally build my wealth. I have portfolios. So it's also another approach, another vision. So as I'm going forward in my life, normally my wealth is going up and my insurance need is going down. And that's where I think that at 65 years old, I might not need it. However, there is some situation, and I'll take, for instance, I like duplex, because I'm talking about that 3 times tonight. So I own a duplex. I'm not living in that duplex. I live in my house, and therefore that duplex will be taxable when it's sold because it's not my primary residence. I don't plan on selling it. I want to keep that for the rest of my life, and I want to give it to my kids when I die. But I know that when I die, there will be some taxes, that's for sure. And I don't want my kids to be forced to refinance or to remortgage that duplex, or to have to sell it or to cover those taxes, because the taxes can be quite high. If I bought that duplex 25 years ago for $100,000 and I die in 50 years and it's worth $2 million, I'll have like $600,000 or $700,000 in taxes to pay. So I don't want my kids to be forced to sell that duplex. So one of the strategies that I could use is by getting what they call a permanent life insurance. So instead of being a term life insurance that ends up at a certain point in life, this one is permanent. It's going to cover me for the rest of my life. However, again, that needs planning, because if I take that insurance at 65 years old, the cost is going to be completely enormous. In some cases, it's still valid, but if I had planned that 25 years in advance and I took it while I was 35, then the price is lower. So that's one of the ideas. So sometimes people think that they need insurance for all their life. No, a good planning will reveal that we might not need it eventually. If it reveals that we do need it, there is some products that we can use for that can be used before. And if that hasn't been planned, there is some temporary, some term that it can still be renewed by 65, but the costs are very, very high. So again, we're going to have to decide what would be the impact of me passing away. What I like to do is usually estate planning in this case. So I take all the investment, all the wealth, or the different account, buildings and everything you have, and we do simulation on what would happen if those are all transferred to my wife, to my kids, to whatever. The tax impact would be different in all those people. And then we can decide, okay, do I really need it or do I don't need it? And that's where we can take decision earlier in the path. And we're not stuck in a situation at 65 years old where we say, oh, I should have done this. So I would say that would be my best answer.
Which is a pretty incredible answer. I think your family is super lucky to have you. Just the thought process that you have, the numbers you put in, it sounded like something super simple at the beginning. And at the end, I'm like, wow, can you do a bad mistake by not knowing what you do? So thank you so much.
If I can piggyback on that, Neo, we were mentioning earlier the cost of doing planning. And I was saying, like, it can be 2,000, 3,000, 4,000. The amount doesn't really matter. But I just gave you an example of bad planning that could cost $500,000. So when you look at, and that's just one little thing into the whole possibilities of planning. So that's what makes a difference. I know it might be a little more exaggerated just to touch our imaginary, but that's what it makes a difference.
Well, thank you so much for sharing this. For sure, if I'm buying a condo or anything, I will go see a financial planner. And for all of you there interested to know a little bit more, or maybe to jump into a career in financial planning, we're going to be sharing some links with you later on. It's still time for maybe a final question. So while I'm wrapping up, feel free to think about anything in there and take advantage of having these amazing speakers here today share their wealth of knowledge.
I would like, if there's no other question, and if there's one, we might want to go over that one. But there's one thing that we were having that conversation earlier this week. I would maybe put the monkey on your shoulder, Eduardo, and say, what is the program that McGill has in terms of financial planning? Or we know that the IQPF has to give the designation of financial planning, but how is McGill preparing their students to reach into the IQPF and get their designation?
Yes, so thank you for the question, Guillaume. So currently, McGill actually does not have a program that is actively accepting students that is directly focused on the financial planning examinations that are offered by IQPF and the English version outside of Quebec in Canada. This program is under revision. It may come back as a different type of program, maybe not a credit program. It used to be a graduate certificate. It was called the Graduate Certificate in Financial Planning, and it's been put under review due to low enrollment, which was interesting. This was when I was arriving at McGill to play this role as academic coordinator. So I didn't really see everything that happened that led to that situation. But we can see very clearly that this is a career that has lots of demand. It may be related to the type of program that we had. It may be related to attracting I think we can attract not only English-speaking potential candidates and students, but even French-speaking as well, because much of the I think the population in Quebec is not only bilingual, but they do have the interest in developing their English skills for professional reasons and other reasons as well. So McGill can play a role there as well, with differentiating ourselves a little bit from other schools. But these programs, they exist in different universities. McGill has its one under review, and in the meantime, we also offer other types of finance related programs, such as a diploma in professional practice in finance. It's 2 year plus, depends on the pace at which students will take all the courses, and it's much related to financial planning, but I would say it's more focused on the institutional side of the business. So the clients would be mostly not the individuals that you were going to be essentially playing that role of the financial doctor, but the clients would be these institutions, the pension plans or foundations, endowments, and you would be kind of doing the same thing. You would be measuring their level of tolerance for risk and their financial goals for that entity, and you will be giving advice to the decision makers as to what is the best approach to do regarding that situation. So it's just that instead of looking at an individual, you're looking at an institution, and so these are the different areas in our world of finance, and McGill has been involved in a partnership with the CFA Institute as well as with the IQPF. So I do participate in the IQPF Professional Development Committee. I do participate in their meetings, and this is something that as we hear more about the demand for a program in financial planning, we're certainly open to revive it, even if it's in a different type of format, maybe a non-credit program that would be focusing directly on the exams for IQPF. That could be one.
I'm pretty sure most of your finances program can lead an individual to IQPF eventually anyway.
Exactly, and we also had IQPF.
Yes.
So we had IQPF and CFA at our last career fair in 2020. Right before the pandemic hit us by surprise. So definitely, very interested in our student. And we have the last question. I know we're over time. I don't know if it can be answered pretty quickly. So Ash, so much is having a financial planner for personal finance, one that knows what you describe, have connection to tax expert and accountant. It's a yearly cost or based on task?
So as we mentioned, there's two different types. The one that is most common usually is normally a yearly cost, and yearly cost is essentially based on assets. So there is a fee that is charged as a percentage based on total assets. That percentage can go down as the assets are going up to try to make the fee reasonable for people, but it's usually a yearly fee because we want, and there is a reason behind that. And personally, I think it's a good reason. I'll try to cover that real quick. But if you give me $1,000, I'll put it a big number to do a task for you. When I cashed in that $1,000, my task is done. There's nothing else I have to do for you. However, if you're giving me $100 a month to do that same task, I'll keep following up with you. I'll stay in contact with you. I'll give you a call back from time to time and say, okay, have you thought of this? Should we do that? And so being paid a lump sum payment for a task, for me, takes away the whole planning part, or the whole follow-up part, which is very, very important. I can make the best planning in my life for a client, but if I'm giving it to that person and she doesn't put it in place, my work worth nothing. So if I'm following up with that person, we're meeting every month or 2 months or 3 months or every year, and we're restructuring the plan based on what happened during the year, because it's not a clear path. We know where we start, we know where we're going, but the path between the two is going to change. So every year there is some adjustment to be made, and so that's why I see as being we call that an advisor fee or a trailer fee, or really something that my client is paying me to keep track and to still be involved all the time in their files. And that's what makes a difference for me.
Thanks. Thanks. I'm happy you had a chance to answer all of the questions in the chat. There might be a few ones in the social media. So look, I'll just wrap this up real quick. Ash is saying thanks. A lot of people were saying thanks also. So thanks again, Guillaume, Eduardo, and for everyone joining us today. So we really see that you're passionate about what you do and super knowledgeable. So thanks a lot. And as you can see, we have everything already, the recorded session live on social media, so you can watch it again. And we're going to be sharing also, if you want to connect with Guillaume, Eduardo, or whoever at CATS or SES. And this was the last session of an incredible day filled with so many industry experts. If you enjoyed the session and appreciate the fact that it was free, we hope that you will think about giving back with a simple donation on our PowerSkills website, which is here in the chat that I just included. Join us again tomorrow and continue learning and having fun. See you at 8 with Naz Bilon Bouquet, learning to pause. And I'm going to turn off the recording if anyone wants to go off cam and